Hi, this is Dave Ford, President and Founder of the Atlantic Gold and Silver Centre. Today is Thursday, the 21st of September 2017. We're back from our summer break, and today we're going to have a look at why you should spend your loonies while they're hot. Now, a few months ago, the Canadian dollar dropped below 70 cents US. That's an exchange rate of 1.45, and some people got upset at me for bashing the loonie because it was so weak, and I thought it was going to continue on down. But no, it recovered about 20%. It's now worth about 78 cents US, and that's great news. It's great news for our purchasing power, and it must mean that the Canadian economy is doing great. So let's see just how and why the Canadian economy is looking so wonderful and the loonie has gone up so much. Now, in July, the Bank of Canada raised the base rate from 0.5% to 0.75%, and improving the strength of a currency automatically makes it go up on the international markets. And then a couple of weeks back, they raised it again from 0.75% to 1%. So they've essentially doubled the base rate in 3 months, and they're talking about raising the rate again. Now, the moment you raise rates, it's a sign that they think the Canadian economy is doing well, and they have to act to bring up interest rates in order to cool speculation and cool the economy down and prevent inflation. But hang on a minute, in the first 6 months of 2015, the Bank of Canada were aggressively cutting rates. They brought them down from 1% to 0.5%, and that was because of the oil price crash, which went down to $50 or so from $100, and they were worried how that would affect the Canadian economy. Now, oil is still just under or around $50, and yet they have raised their interest rates back up to where they were at the start. So what's happened to warrant this total reversal in their rate policy? Now, here's a chart with the oil price from the last 5 years up to present day, and we're going to compare that to how interest rates have changed. So, back in 2013, 2014, 2015, interest rate was 1%. The crash in the oil price prompted them to bring down the rate to 0.75%, and again down to 0.5% in early 2016. And it's remained at 0.5% for, just over a year or so. And then in July this year, they raised it back to 0.75%, and then once again back up to 1% just a couple of weeks ago at the start of September. Now you can see from this chart that the oil price hasn't gone back up. So why are the rates going back up? So what the Bank of Canada said was that GDP had gone up, that the economy was improving, and that they therefore had to raise interest rates to cool the economy and stop it getting out of hand. Now, you would think that economic improvements like that would be good because of good economic data, but unfortunately in this case it's not. The only increase in activity in the country economically, or the main increase, is because the government has borrowed billions of dollars and spent it. All that money has come out into the economy and is producing economic activity and potential inflation, but it's only at the cost of borrowing. Now think about it. If your neighbour suddenly starts buying expensive cars, doing refurbishments to their house, going on flashy holidays, you might automatically assume that they're doing well. But they could just be going heavily into debt, and at some point down the line the price is going to have to be paid. That's what the Canadian government's doing. They're borrowing money and spending it to give the appearance of wealth, and that forces the economy to look good, even if really it's all based on debt. Now, all this debt has to be repaid with taxes. Once the taxes start having to go up in order to pay for all this debt, the Canadian economy will stall. They will be taking money back out of the economy in order to pay for the debt that they've incurred now. And without this continued debt and spending, the GDP will turn down again, and the Canadian economy will soon be in a recession. What will the Bank of Canada do then? They will drop interest rates, and the loonie will go back down against the US dollar and internationally against all other currencies. So the message is pretty clear. Spend your loonies while they're hot. This is a short-term blip in the price of the loonie. Just check out the price of gold in US dollars and in Canadian dollars. It's been going up in US dollars and down in Canadian dollars. This may last a couple of years, but sooner or later the debts will have to be repaid, taxes will go up, and the purchasing power of the loonie will go down again. So this is a great time to be looking at buying any kind of assets with your Canadian dollars while they've still got good value. You can buy more gold and silver or cryptocurrencies today than you could a couple of years ago with the Canadian dollar because it's starting to strengthen so much. Thanks for watching, and we'll see you again in a couple of weeks.